I'm supposed to sum up what was said over the past day and a half. That's very, very difficult. I have a couple of pages, many pages, of very good notes which I was given by one of the participants here. She wrote them, and she had told me beforehand that she was going to take notes because she used to be a journalist and would be willing to share them with me. So if you're willing to wait 3 days, I'll summarize them and so forth. I think this has been an extraordinarily good conference. I went through the notes that I was given, and we had excellent people giving, by and large, excellent papers. I don't know how. This is the first such conference, is it? Well, I hope it won't take 10 years to get to the second such conference, such a conference. I just want to add a few words about some of the things that slightly bother me about the way we solved the problem of the crisis and what is happening now. Thanks to the central bankers in particular, but also other policymakers, we came through a massive shock that occurred starting as early as 2007 and going through to the end of 2008. And we came through it pretty well, in fact, although it certainly didn't seem we were going to at various stages. So we've been through that tough period, and we've shown that the system could hold together with a variety of extraordinary measures being taken, and with a variety of occasions on which one thought this was the end. And actually, of the three people here, I think that the one who probably had to deal with the most skepticism about the ability of his organization to deal with the crisis was Jean-Claude Trichet. They were forever talking about how so-and-so was going to fall out of the monetary union, and the monetary union wouldn't survive, and there'd be a southern monetary union and a northern monetary union, and everybody had a scenario for collapse and disappearance, and it hasn't happened so far. And I think that was due to remarkable measures, remarkable intelligence in putting the system back together, in accelerating changes, which, as Jean-Claude said, apropos the banking union, that people thought would take forever and didn't, and were in place very quickly. But I don't think we should exaggerate what has been achieved. I believe there is a clear link between the populism that is seen now and the fact that we were not able to handle this crisis without major economies going through massive difficulties. And I suspect that the results of what we did, the very good results of what we did, were not enough to keep Western countries, the leading democracies, on the path which they had succeeded in laying out at the end of World War II and continued to pursue until very recently. And I very much doubt that we'd be in this position if we hadn't had the great financial crisis and the Great Recession. So the question is, what happens now? How do we get the United States back on track? That's a political question. As much as anything else, I don't have any particular knowledge in this area. I suspect we probably need more political economists among our fraternity than we have had for quite a long time. And I think we do know a lot about how to make the system tougher. But I'm very worried about the trends we have now. What is the trend? Well, we've got these new Dodd-Frank regulations in place. They're clearly much too strong. There's all this excess capital hanging around. Let's reduce it. Why should the small banks have? First of all, the measures are too strong for the small banks, so let's reduce the capital ratios for small banks. Done. Okay, why should we give the small banks an advantage, say the big banks? Boom, that pressure is coming. And we'll have to realize that we need to mobilize in support of these things, which seem very abstract until the time comes when they happen. And then they're not abstract anymore, and they're a danger. And so I think and I'm not asking us to do political things, I'm asking us to do economically sensible things and to support economically sensible proposals that will reduce far more than we already have the probability that we will experience another crisis like this in the next, shall I say, 30 years. We're going in the other direction in terms of what's been happening in the regulatory field, and that is something which I find extremely worrisome. I believe that the Great Recession, the Great Financial Crisis, had as much to do with failures of supervision as with failures of monetary policy. And I think that we as bankers, as heads of central banks, have not taken that into account with the same degree of seriousness and the same degree of research work that we've done in the monetary theory, in the monetary policy analysis, and that we probably have to do more of that. Certainly it's been interesting listening to what I heard today and yesterday. There were excellent papers which in essence were about supervision and regulation. And I hope we can move somewhat more in that direction, and I hope we can, in the end, persuade others that although the regulations seem excessive, the bank regulations and the supervisory regulations seem excessive, the consequences of failures in that area are much bigger, and as we've just seen, than we had thought in the 70 years after the Great Depression. So let me first thank Bob Merton and Andrew Lowe for organizing this conference, if I've got the right people. I think I have. Thank you. And thank in particular the supporters of the research that's been going on in this area in many of the centers of excellent economic research at the great universities, and say we look forward to seeing how much further along the road we will be 1 year from now. Thank you very much indeed to all of you and to all the authors and to the organizers.
So this has been an extraordinary couple of days, and it's my great duty and privilege to close the conference by saying a few words of thanks to all the various different participants that have made this conference such a success. So I want to begin by, of course, thanking annual reviews, as well as the MIT Golub Center, NYU Stern School, as well as the Salomon Center. And on behalf of Matt Richardson, Debbie Lucas, and Bob Merton, we're so grateful for the support that we've gotten, as well as the CFA Institute for broadcasting this and for going out to all of the CFA candidates present and future. I also want to thank the editorial board, without whom we would not have the annual reviews. If you are impressed by the quality of the papers and the speakers, you can thank these individuals for that. And of course, I want to thank Sam Gubins, Richard Gallagher for their leadership in the annual reviews, as well as all of the senior staff at annual reviews for supporting this. But most of all, I want to thank all of you and the folks that have created the conference. I want to thank Crystal Myler. Crystal, are you here? Yep, Crystal, thank you. Deirdre Wade. I want to thank Deirdre. I want to also thank other folks at Annual Reviews, Jennifer Jongsma, who's, I think, out in the back, but thank her on her way out. Let's see, Anna Raskoy-Paz. Sorry, the confidence monitor is not here, but Lucinda Mendoza. Please join me in thanking them as well. And most of all, I want to thank Jenny Rankin. Jenny, can you come up here for a minute? For doing your yeoman's work in organizing all of this. We have a small token of appreciation for all that you've done.
Thank you so much. It's been my honor. Thank you so much. You're the
Thank you.
best.
And I want to now thank all of the participants, the speakers, the authors, and all of you. We've had some extraordinary experts up on stage, but there are extraordinary experts that are in the audience as well. And it's only by bringing together all of the relevant stakeholders that we think we can move forward with the hope that better models, better methods, better data is going to be able to allow us to come up with better policy. And to that end, I want to share with you just one interesting email that I got from a colleague at MIT, not in economics or finance. He was in computer science. He asked to meet with me today, and I told him that I couldn't do that because I was here at a conference focused on the 10th anniversary of the financial crisis. And he replied, "What a weird thing to celebrate." Anniversary, crisis. And so I told him, this is an important meeting, but it is in no way a celebration. We're here today because of the extraordinary devastation that the financial crisis had on hundreds of millions, if not billions of people around the world. And the purpose of the meeting is not to celebrate, but rather to do some serious soul searching of what happened, why it happened, how it happened, and what we might be able to do to make sure that either it never happens again or when it does, we're properly prepared. You see, for most of the people outside this room, finance is a means to an end, not an end unto itself. And it's easy to forget that for those of us who are in the midst of the research and the practice, but it's something that I think all of the participants here understand deeply. And in particular, I want to say another word of thanks to the central bankers and policymakers that were here with us today, because it's through their leadership, their personal sacrifice, that we actually got through the crisis in the ways that we did, and it could have been far, far worse. So again, please join me in thanking all of them. And last but by no means least, I want to say a special word of thanks to Stan Fischer and Bob Merton, not just for their scholarship, which we understand, but for their roles as educators. They've trained generations of economists, a number of whom are now in the position of making policy and implementing the ideas that we've discussed. In fact, my PhD thesis committee chair and advisor was Andy Abel, who is a student of Stan Fischer, so I can claim to be a grand student of his. I'm very proud of that fact. And that's really the mission of the annual reviews and the CFA. It's really to provide the research to be able to train the next generations of policymakers and specialists. The hope is that by putting out all of these ideas and training the next generation, we will have a much better chance of dealing with crisis in the future. Thank you very much.